SoftBank shares just plunged more than 9% in a single day, leading a sharp sell-off across Asia's biggest tech names. The trigger: losses in U.S. tech stocks, especially Nvidia, which sent shockwaves through the global semiconductor market. So what's behind this sell-off? Why is SoftBank getting hit the hardest? And what does it mean for the future of AI and chip investing? Let's dive in. On Wednesday, shares of SoftBank Group, Japan's tech investment giant, fell as much as 9.2%, marking their steepest decline in months. This wasn't an isolated move. Tech stocks across Japan, South Korea, Taiwan, and Hong Kong all followed Wall Street's overnight decline. The main culprit? A sharp drop in Nvidia shares in the US, which dragged down the entire sector. Nvidia has become the bellwether for global AI and chip demand, so any weakness there ripples worldwide. But why did SoftBank, in particular, take the biggest hit? Two reasons stand out: fresh Intel investment. SoftBank recently announced a $2 billion investment in Intel. Heavy AI exposure. Through its Vision Fund, SoftBank has big stakes in AI startups and chip-dependent companies. So when AI sentiment cools, SoftBank feels the impact immediately. The sell-off suggests investors fear SoftBank's aggressive AI positioning could backfire if growth slows. SoftBank wasn't alone. Across Asia, tech names took a hit. In Japan, semiconductor giant Advantest fell over 6%. Renesas dropped 2.5%. In Taiwan, TSMC, the world's largest chipmaker and Nvidia's key supplier, fell almost 1.7%, while Foxconn lost over 2%. In South Korea, SK Hynix dropped more than 3%, though Samsung Electronics managed a small 0.7% gain. There's also a policy angle to this story. Reports surfaced that the U.S. government is considering taking equity stakes in semiconductor companies that receive subsidies under the CHIPS and Science Act. So between government intervention, volatile AI demand, and investor caution, tech stocks are caught in a storm of economic, political, and market risk factors. So what does this mean going forward? For SoftBank, the company's AI-heavy portfolio makes it more sensitive to Nvidia's swings. For Asian tech giants, expect volatility. These companies supply the chips, components, and factories that power AI. For global investors, this is another reminder that when Nvidia sneezes, the entire tech world catches a cold. The AI trade is powerful, but fragile. SoftBank's 9% plunge is more than just one bad trading day. It's a warning about the fragility of the global AI ecosystem. With tech stocks from Tokyo to Taipei to Seoul tied so closely to Nvidia's performance, the real question is, can this AI rally keep going, or are we looking at the first cracks in the hype cycle? What do you think? Is this a buying opportunity, or a red flag for AI investors worldwide? Let me know in the comments.